Hi, and welcome to another edition of Never Ending Climb for companies running SAP for a stronger supply chain and procurement. Today we're going to talk about what the heck is Procure to Pay? We get a surprising number of questions about what is this, because there's a lot of people that don't work in procurement, don't understand it, and don't always, frankly, care. They just know they need stuff. So let's try to break this down. First of all, what is Procure to Pay? It's basically a step-by-step process to help manage the buying process. Why? Because companies need to manage their spend. They need to know that they're buying things the right way instead of, oh, just send me an invoice and hope it works. First up, there's supply management, and this is a product of your procurement strategy. So the organization will have a strategy for how they're going to manage their spend, what sort of categories they're going to organize their spend into. Some of them take it all the way over to using UNSPC codes. That's the United Nations special something codes that the acronym doesn't really matter, but it's a classification code system that some companies use, some companies think it's overkill. The most important part is that you have a categorization of the most important different types of spend. This gets tricky sometimes where you've got one vendor that covers more than one category of spend, or perhaps a type of product that you buy that depends on whether you use it one way or another, might be direct or indirect, which are usually different flavors of different categories. So, next up, supply management. What supplies are needed? How does that fit with the budget? From that, you're going to drive your vendor selection. And this is often done, this is kind of the fun part of Procure to Pay. This is where the procurement team really shines and helps identify vendors working with this organization that they support, figuring out which vendors and suppliers are going to be able to best meet the needs. That means that you're not measuring people like pencils. And it means that services are not always sought out to be the lowest cost supplier, but rather the most value to the organization. The cheap way out, and by cheap, I do mean that cheap plastic thing that breaks the first time you try to use it, is to find the lowest cost supplier. And the wrong way to do it is to go and negotiate so hard with those suppliers that they don't want to see you when you come to visit them. If you're in town and your supplier is too busy to meet with you, you know you didn't treat them right. Now, next up is that vendor selection. This is where you want to be making sure that you have your preferred list of vendors and you've got your contracts. Within SAP, this means that you've set up the business partner, the vendor. This means that you're now setting up those purchasing info records and contracts to make it fast and easy for the payment terms, the prices, and all of those different things that you've agreed with your suppliers that you can now access. If you do not have the prices from the contracts and purchasing info records and the lead times, the requirements from suppliers for lot sizes as a minimum lot size of 50 and you're trying to order 10 and wondering why it's a problem, if you don't have that, it's time to invest some time here because these are the prerequisites that help everything else go a lot faster. Next up is that purchase requisition. For a lot of organizations, most of what you buy, if you are manufacturing something or if you're using the MRP, which is the manufacturing requirements planning, materials and resource planning, depending on which way you want to slice it, this purchase requisition could be automatically generated if that material or service is required for something that's being planned for production. That means it's been already organized into a bill of material and it's already been planned for production, and now all of those individual components are lined up and ready to be bought. That means that you can use your SAP system, and unfortunately there's a lot of people that don't do this, to go and plan for all of the work orders that have components that are needed, for all of the production orders that have either parts and services that are needed to go make those things. Those are opportunities to go make sure that those requirements are being calculated automatically. Then for all of those other things that aren't directly related to things that you buy, this is direct versus indirect. So for direct, Direct spend is where it's going directly to things that you are going to sell. You're buying something so that you can make something to sell it. Your indirect expenses are where you have something like you need a project manager to go help you with a project, or you need to buy, say, some cool SAP add-ons from a company like ours to go and help your SAP system run better. Then that would be an indirect expense, and that would be a purchase requisition that you want to fill out. And this is after procurement has set up the vendor, and sometimes when you're not sure who the vendor is going to be. Because if you don't already have the vendor set up, you might need a requisition. And if you need to requisition something, this is where it ideally is coming from an existing vendor. If not, you might need to run what's called a sourcing event. Sourcing event is where you're going to be going out and figuring out who you're going to be buying that sort of thing from, who's best equipped to help provide this for you. If that's the case, this is where intake management helps make it simpler, easier, and clearer for the organization. Let's say it's just a manager or a director. They just need something. They don't necessarily know or care the intricacies of your purchasing policy and so on. So intake management comes in to help support making it simple, easy, and clear that there may be 15 different steps behind this before the person that asked for it gets what they need. So if it's a simple requisition, you need a standard service that's coming off of a catalog, boom, done. If this needs a sourcing event, or it needs some evaluation, it needs some planning, work, and new contracts and so on, there might be a whole bunch of steps behind this. For the rest of this video, we're gonna focus in on how a standard flow goes, and we'll just touch on a little bit of how the different flavors of requisitions might look if you're not buying straight off of a catalog or off of a pre-set up vendor, but rather you're potentially buying something from an organization that you haven't worked with before. So if you're buying off a catalog, your next step is a purchase order. If not, you might be down in one of those different sort of flavors where intake management can really help, because you might be going out and doing those sourcing events, you might be going out and figuring out who to buy it from, figuring out how you're going to pick between a few vendors that you've evaluated, getting one of those vendors set up, making sure the contract is set up, making sure that you've agreed on prices and terms and everything else, and then you get to the purchase order. This becomes the order that goes to the supplier that says, hey, we really need you to do this. Now, best practice at this point is to get your supplier to confirm this. So this purchase order, the purchase requisition often has an approval. The purchase order may or may not have an approval. If your requisition already has a price and so on approved, great, off you go. Typically, an organization will pick doing the approval on either the purchase requisition or the purchase order. If you are working for an organization that has maybe some soul-crushingly painful processes, they might force you to do an approval on both. It's not best practice, but it happens. So if the purchase requisition is approved, typically somebody in procurement will go in and create a PO that gets submitted. It may need an extra level of approval or review, and then this is the PO confirmation step. The PO confirmation step should be done by the vendor. Oftentimes we see this done by email, by phone call, hey, we need this, can you really get it to me, text messages. And now we see that there's examples of somebody that says, hey, I need this and I need this price, and you get a thumbs up as a text message reply, and that's basically now a contract. So careful how we do this. This PO confirmation here, what if it was done by the vendor electronically? Crazy idea. But this should be table stakes for you. If you cannot get your vendor to confirm the purchase order with the price, the quantity, the date, and the details of what's needed, and they can't submit that in a way that your SAP system understands it automatically, electronically, with no other human intervention, there's a problem. So we've got opportunities to help you with this. Next, service entry sheet. After the purchase order is confirmed, there's either a service entry or a field ticket. For some organizations, these are the same things. If you're in the energy, utilities, and mining industry, you might call it a field ticket, where somebody goes in and does the maintenance work or does some other service work. They sometimes are out in the middle of nowhere, and you don't know or care whether it's Tim, Bob, Sally, or Raju, and they're out there and they're doing the work. you've already agreed on the price and you've already agreed on the delivery terms and all the rest of that. But now this needs to be confirmed that it's done. This service entry could be a vendor timesheet. It could be, yes, we've completed this milestone. A field ticket can sometimes be similar, but one of the differences between services and field tickets are often associated with industries like energy, mining, utilities that have more complex rate structures. So you might have, several levels of complexity. For an electrician, level 3 on a day that's raining outside might have a different rate from a different electrician. So that field ticket or service entry need to be entered. If you're in SAP, this is typically done not as a material, but as a service entry sheet. Now, this often means that one of the contracts that was set up might have been an outline agreement. Now, this service entry or field ticket can be done by the vendor. So if you've got a service entry, what if that was done by the vendor? Instead of trying to figure out how to upload a spreadsheet or having admin staff going and punching stuff in, and then the field ticket, that should be done by the vendor. So if you need that done in SAP, again, what if it was done by the vendor? Should be done electronically, and if you cannot receive services, field tickets, including that detailed time entry directly from the vendor into your SAP system with no human intervention, that's a significant opportunity. The next one is a shipping notice. If you're in automotive, you've been doing this for decades. If you're not in automotive, there's a lot of other organizations that are just starting to mature into this. Some of the manufacturing are getting a lot better. But a shipping notice, an ASN, advanced shipping notice, is where you should be able to get the supplier to say, we shipped it to you, ideally with a tracking number. That means, hey, what if the vendor could do this for you? Because once you complete and have an approved PO, your supplier, your vendor, should be able to confirm the PO and confirm when the service, the field ticket, or those materials have been shipped. So you've got the vendor set up, you've got rates and contracts and so on set up, you've done the purchase requisition, you've got your purchase order, and you should have your supplier, your vendor, confirm the PO, confirm when they've completed the services, and this might be multiple times. Say it's a year-long contract and you need weekly service entry or timesheets from them. That could be multiple of those. But now, once they've submitted the services and they've submitted the advanced shipment notice, then you want to be able to accept or reject. This means that on, say, a supervisor's mobile phone, or whoever that supplier, that vendor is working for, they need to be able to get on their mobile phone a simple, quick, hey, Ted over there says he's just completed this engine overhaul. Yep. This project manager just said they've completed 160 hours of work for us this month. Okay, red button, green button, needs to be simple, needs to go to the right person. That needs to be done. Simple. Next, goods receipt. This needs to be done with scanning. So you want to be able to have your supplier able to go and print out their barcode that you need, and you can make that available to them so that your supplier can see the barcode that you need, and they can print it and put your barcode on the materials they're shipping to you along with that advanced shipment notice, so that when it comes in, your team can simply scan it. Boom. Make it easy. Now, you've got your services, your field ticket, you've got your goods receipt. That's all done. Let's move up the process. Now your supplier, say they're a month into a 12-month contract, maybe they're finished the whole contract, maybe they're halfway through a contract, they need to send you an invoice, they need to get paid. It's how it works. So the problem is, almost every solution that we run into out there relies on hope as a strategy. And I don't know about you, but I believe that hope is a terrible strategy for getting an invoice correct. So I believe that it's important to help your supplier simulate their invoice so that they can get it perfect for you to the penny with the right tax rate, on all of the different lines and the customs and the freight and everything else, so they can simulate the invoice to the penny for the invoice that you were expecting based on how three-way matching works. Two-way matching, by the way, could mean that if you have a PO and you have a service entry sheet or goods receipt, You can skip this and you can skip this and you can automatically pay them using, again, one of my favorite things, evaluated receipt settlement. That is a beautiful, beautiful thing that the automotive industry has been doing since before 1990. So it's not exactly blazingly new, but it's new for some industries. So if you still require a three-way match where your supplier sends you an invoice, let's help them get it right. Let's help them simulate that invoice, because if they are missing a goods receipt or there's missing service entry sheet or field ticket approval, let's make that clear to them so that if they think that you owe them $100,000 and you're missing a goods receipt or a service entry sheet or a field ticket for $5,000, they can see the $95,000 that both of you have agreed works and makes sense, and then they can simulate that invoice for $95,000, send you the invoice for $95,000, and have confidence that it's going to get processed and paid because it three-way matches to the penny every time. Then they can open a case for any sort of missing goods receipt, service entry sheet, etc., any missing field tickets. Then just get that invoice submitted, invoice payment, monitoring. Maybe there's an exception if there's an invoice that comes in. This is usually where it gets messy. Remember that earlier comment about just get it done and send me the invoice? That's using hope as a strategy. That typically lands in exception land. That's not where we want to go. We want to make sure that we're buying things the right way, getting them on a PO, getting those things, or even if it's just a framework where sometimes the idea of getting a PO for everything you need to buy scares the crap out of people. So what if you just get a framework set up where you've agreed that you're going to spend money with this vendor? You've agreed on the prices and rates and stuff. Maybe it's muffins and pop and sandwiches. If you've already agreed with that caterer that they're going to provide muffins and whatnot at a certain set of prices, and you're probably going to spend this much money with them, then they should be able to go and let you know that they've completed that, get it approved, and just get paid. And they should be able to see the invoice that they've simulated. They should be able to get the invoice processed and paid quickly and avoid exception hell. And then that brings you to reporting, which circles straight back to the strategy, the vendor selection, and the vendor management, and then how you set new prices, how you manage those different categories. And that reporting helps, when it's done well, means that every cost center owner, every budget owner knows exactly, up to every service entry sheet, up to every goods receipt, every invoice knows exactly where their budget is, and they don't need to wait for days or weeks to figure out whether or not they're tracking to their budget, or whether their work order or their other project is on track or off track. And it means that if your service entry sheet, your field ticket is submitted on time, it means that your accruals can be done. And by the way, we've got an app for that too, to help automatically calculate accruals in days and even hours or minutes to figure out what your vendors probably have not yet submitted timesheets and invoices for. But that means that you can get into some very advanced reporting where you know the spend, the contract compliance, what different departments are maybe buying on PO better than others. Are there particular team members or areas within your organization that are buying things on invoice all the time, and there's significant opportunities, as there often are, for a procurement team to come in and help get that onto contract and save the organization, as we often see, millions of dollars. So, reporting, you should not have to start from scratch. There are many opportunities, and I know our team has invested huge time and energy in co-innovating with SAP to go bring to you, out of the box, reports and dashboards to help cover off what you need to see for lead time, spend, etc. So that reporting shouldn't have to start from scratch. You should be able to start from a preset collection of dashboards, help get you started, then you can tailor them from there as needed. The benefits, obviously, save millions of dollars. That's why we do this. That's why there's hundreds and hundreds of vendors and analysts and organizations like Spend Matters that really go and look deeply at all the different options that are out there. And they're a participate to play as opposed to a pay to play, which doesn't necessarily reflect well. So I deeply appreciate organizations like Spend Matters that are out there taking a look at the opportunities to go and support organizations that are making a difference and help organizations looking for solutions make better decisions. And that is where benefits get unlocked. Let's get into the next 3 types of flavors, the main 3 categories of where this comes from. So those millions of dollars that you should be saving are going to be coming from purchase compliance. That means that the work, the strategy, and so on that you've put in, that comes out clear communication with vendors and making sure that you've got on-time payments to them, because your vendors are going to charge you a lot more if you have trouble paying your bills on time. Then, benefit number 2, better budgeting. When you have the insight into the contract rates you should expect to pay with what vendors, you can budget better, and you can make sure that those prices line up, the compliance lines up, the prices line up, and then improved collaboration means that email is not a vendor portal. And when you are trying to communicate, eliminate email, get things done electronically, EDI was brand new in the 90s. It's not so new anymore. There's more modern, more responsive, lower overhead capabilities to integrate between suppliers. And if you don't at least have some kind of a collaboration portal or network with your suppliers, you're way overdue to get that in there. So this is where making sure that you've got the communication, alignment, and integration with your suppliers so that you do not need people manually typing stuff in for invoices, for POs, for things that are just best done by your suppliers. So that was high level, what is Procure to Pay? You've got the upstream sort of activities where you have the sourcing and figuring out the vendors and the strategy and all the category management and things like that. That needs some analytics, often done in Excel. That's okay. Everybody does it. Then that turns into the catalog, the set of contracts and prices and agreements that you've got in place with your suppliers. That turns into the operational, kind of the downstream Procure to Pay that's more transactional of purchase requisitions, purchase orders, the goods receipts, service entry sheets, field tickets, invoicing, getting them paid, and then getting that reporting done. So that's where the circle comes straight back into Procure to Pay. I hope this explanation has been really helpful for folks out there that want to know a little bit more about it, but they don't want to go all the way down into the gory guts of it. We're going to drill more into a few of these different pieces over time. This has been another episode of The Never-Ending Climb for a Stronger Supply Chain and Procurement for Companies Running SAP. We'll see you again next week. And if you're looking for an opportunity to level up your SAP system with a significantly valuable add-on, I know somebody that can help you. See you again next week.